Hello guys, on this video I will be discussing property plant and equipment which is dealt by IAS 16. Before going into the definition of property plant and equipment, I want you to understand the definition of an asset because property plant and equipment will cover under the definition of an asset. It's a non-current asset. So what do you consider as an asset? An asset, as per the definition given by IASB, it has three characteristics. The first, the entity must have control over the assets. They must have control over the assets. The asset should belong to them. I'm talking about substance over form. They have control. Control in the terms I can explain, they have the right to risk and reward over the asset. The second thing is, there must be some future economic benefit associated with the asset. Asset is something which will provide benefit to the entity. Either may be it through cost savings or either it may be due to revenue generations, just like acting as a CGU or using in a CGU. Or it can be used and the benefit will flow to the entity. Because we prepare financial statement for the entity, we are showing the asset in the books of the entity. Hence, at least the cost which has been shown in the books should provide benefit to the entity, which means if I am showing non-current asset as 10,000 rupees, we assume that we have control over the asset and the asset will provide the benefit to the entity, which means the flow to the entity of at least 10,000 rupees. And here and I will depreciate, and if we think that the recoverable amount is very much less than the carrying amount, we will make an impairment. So this is the basic definition of an asset. There are various authorities, just like your FRC for UK people, or your FASB, Financial Accounting Standard Board for US GAAP. The primary definitions are the same, wordings might be changed, but the definitions are primarily the same. Now we'll drill down to the definition of non-current asset. We understood the definition of an asset. I'll repeat. Asset means it's a resource which is controlled by the entity, which will provide the economic benefit, and the economic benefit will flow to the entity. So what is non-current here? Non-current means those assets which are primarily held for use on a continuing basis for the entity. It is held for use on a continuing basis for the entity. This is what we call as non-current assets. So before recognizing any asset in the books of accounts, one should be very careful that what we the first condition is the recognition criteria is for any asset, it may be tangible or intangible. The recognition criteria is it must have a future economic benefit. It must have a future economic benefit which will flow to the entity. The second condition, we recognize an asset, either may be a current asset, it may be an intangible asset or a tangible asset when it has a future economic benefit and the benefit will be realized by the entity and the cost can be reliably measured. This is the recognition criteria. I'll give you an explanation. Suppose this is an asset. You have your recognition criteria, which means future economic benefit for the entity and cost can be measured. Okay, how you can recognize non-current, current, others, how you gonna recognize? So recognition criteria falls in between here. If you met the recognition criteria, now you need to check for the criteria of non-current asset, current assets, and for the PP&E part, and further for intangibles. So it's the first stage. It's the first step you need to check before checking checking the other definitions of either PP&E or intangible assets. First, you need to check whether it complies with the requirements of recognition criteria. It qualifies if he has future economic benefits, and the cost can be reliably measured, and the future economic benefit should flow to the entity. This is what definition of asset and non-current asset means. Okay, now we will discuss about the definition of property, plant and equipment. What does this mean? As per IAS 16, property, plant and equipment is primarily a non-current asset which is primarily held for the purpose of either production or for a rendering of services, including rentals to others, or it may be used for administrative purposes and which should be used for more than a year. That's why we are classifying it as a non-current asset. So I'll give you a brief idea about this. These things are easy, which means if you have an asset, first you need to go through the recognition criteria of any asset, which means the recognition criteria says it should have a future economic benefit, and the future economic benefit should go to the entity, and the cost can be reliably measured. Now I'll filter it after recognizing the asset and how I should treat the asset. First, it should be either PP&E or intangible. How should I know? So I need to focus upon the definition of PP&E. PP&E means any asset that has been held by the entity for the purpose of production or for rendering services, including rentals. Now, why we are not classifying this as investment properties? One thing, investment property deals with land and building, and another part, land and building can also be classified as PP&E. Property, yes, let's cover property, right? So in my point of view, what I think, that if the principal activity of the entity is dealing with real estate or dealing with renting, for example hotel industry, they have property, right, and they rent to the people. Do we need to classify them as investment property? I don't think so. We need to classify them as a PP&E because it's complying with their primarily business activities, and it should have a useful life of more than 1 year. These conditions need to be complied by in order to classify one asset as PP&E. After the classifications, there are two things. You have a transaction. You have one transaction. How are you going to record in your books? Either you can record it at cost, or either can record it at the fair value, right? So every time in regard to PP&E or any asset, I'm considering PP&E only now, on initial recognition, it should be recognized at cost, and a cost specified under IAS 16. I'll deal with that now. So the initial recognition should always be at cost. After initial recognition, they have two options left. Either they can go for a cost or they can go for a fair value. Fair value means your revaluation model. After this is called subsequent recognition. So first, you have a transaction. You need to understand it comply with the definition of the recognition criteria for an asset. Now you need to filter it into and need to understand whether it complied with the definition of a non-current asset. If it's part of a PP&E, if it comply with the definition on initial recognition, you should recognize it at cost. And after initial recognition, the entity has an option. Either it can go for a cost or it can go for a fair value. And fair value, as per IAS 16, is called the revaluation model. So this is how we deal with PP&E till recognition criteria. Now, what is cost? Cost is the amount we're going to capitalize in the books, right? Capitalize in PP&E. Now, what is cost? Cost if you want to understand what is cost, just go think about, suppose I want to install a ice cream machine in one building, not in building, in a street. Suppose I want to install one ice cream machine outside the street, and I'll sell ice cream there. Then it's a PP&E for me, right? Look, we have economic benefit from the asset first. The second one is the cost. I can reliably measure the amount I've paid for the purchases. So after that, I will check for the definition of whether it meets the definition of PP&E. The first definition says it should be used for production or rendering of services. I'm using it for production, and I'm holding this asset for more than a year, and the cost is reliably measured. Then in such a case, I'll classify it as PP&E, right? Now, by what amount I should capitalize in the financial statements? This is what cost means. Cost means by what? By how much amount I will capitalize in in statement of financial position under PP&E class. Cost means cost that are primarily direct in relation to the purchase. Suppose purchase price, any less any rebates that you got, any trade discounts you got, and any taxes that you have paid, which should be irrefundable. Why I'm saying irrefundable? Because if it is refundable, it will become an asset. Suppose you purchase one asset for 10 lakh rupees, you paid tax for 20,000 rupees, so ultimately you paid 10 lakh 20,000, right? The journal entry for this would be asset 10 lakh, as tax recoverable or receivable 20,000 to bank, because this is an asset and this is separate assets. When it is when it is not refundable, then it will form part of the cost of the asset of the PP&E. Now the cost means the purchase price less any discounts that you might get, or trade discounts you might get, any non-refundable taxes, any direct expenses, which means any directly attributable costs to bring the machine to its working condition for its intended use, and it also covers the production expenses or the testing expenses that I make, and it is net of any gain that I derive from the testing. But testing should be normal, because when I install think about a printer. When I install one printer, I take 3-4 printers whether it is properly installed or not. So as per IAS 16, you should capitalize the expenses provided it is material. Similarly, if you are installing a big plant, you need to make a testing for that. If that testing is normal, which means you thought that it will take around 2-3 tests for us to get in proper approval that the asset will be ready for use for us as per our intention. So up to 3 tests, what the cost you have incurred, you may capitalize it. But after that, you should not, because IAS 16 just simply ignores any abnormal costs that you occur for the purpose of your capitalizations. Similarly, just think about all the relevant expenditures that one incurs to install that ice cream machine. I incur taxes, I incur freight, I incur octroys, and I incur certain installment expenditures as well in my territory, in my building. So these costs need to be capitalized, and this is a very discussable area. You need to discuss, because it's a very gray area what should be capitalized or not, and it's a subjective area, and you need to discuss about. But in my point of view, you should always think about the intention for the purpose for which you are acquiring the asset. If you want the asset to be sold, and you have a go down for that, so all the expenditure that you have incurred will go down, It will capitalize under IAS2 because it will go to the inventory. And if you suppose if you want to use the asset in the client place, so all the expenditure that you incur to the client place plus installations, electrifications, and pre-productions all should be capitalized. So the intention is important here. It's a very complex area to deal with. Thank you. I will discuss more on PP&E in my later videos. In my second video, I will discuss it completely. Thanks for watching.